What up, Hyperchange? Welcome to another episode. Today we're talking about Amazon, the company's Q1 2019 results, and as well as the overall trajectory of Amazon becoming a more and more profitable company. The Warren Buffett's annual Berkshire Hathaway meeting was just this weekend, and they disclosed that Warren Buffett and Berkshire Hathaway, or one of the portfolio managers of that company, has actually taken a position in Amazon. And I just think that's a beautiful metaphor for how this company is transitioning from that incredibly high growth and no profit stage into a more mature, much more profitable company. And that's what we're seeing. So we're going to go through the Q1 numbers, look under the hood at what's going on and how Amazon's business is transforming. Got a ton of charts lined up, and then I'm going to go into more of the analysis and the valuation and what happens from there. So let's get right into it. These are the quarterly financials for Amazon, going back every quarter since 2016. As you can see, clear seasonality in Q4. The holiday season is when Amazon does the bulk of their sales. So that's why you're seeing the decline from Q4 to Q1. This is the quarter that was just reported, $60 billion in revenue and $4.4 billion in profits. And I think it is really worth noting, though, that I wanted to overlay Q4 2017 is the first full quarter with Whole Foods, which caused a significant increase in annual revenue and profitability because Whole Foods was a big company. And so that's why we've seen Amazon's financials sort of jump from that quarter. But what's even more interesting since the acquisition of Whole Foods, and this is what I really wanted to hone in on for this episode, is the operating income. Amazon's operating income has been rapidly rising, as you know, and going from this literally the quarter that they acquired Whole Foods, Q4 2017. Since then, they become a profit machine, hitting a record $4.4 billion in operating income in Q1 2019. And I do want to caveat this by saying that in the press release for the guidance, they did say that earnings are going to go down next quarter to more the 3.1 billion is the midpoint, and this is what we're looking at for revenue. So they are expecting a little pullback in profitability, but who knows if that's conservative or not. But the point being here is Amazon's profitability is significant, it's increasing, and why this is so interesting is because we can actually value the company on a more concrete PE price sales basis now that we sort of are seeing what the margins are from the company. And so this is what Amazon has done on an annual financial basis. And as you can see, even annually, we're starting to see a huge pickup in profits in 2018 with a record $12.4 billion in operating income. And then this is what I'm expecting for 2019. I'm using, about in line with the street estimates for revenue, about $275 billion. And I'm seeing profits jump to about $20 billion. And now we can put a valuation on that, which is something that's been tricky to do for Amazon because they've had no profits in the past. But now we're going to take 500 million shares times 1,900 per share equals a 950 billion market cap. 950 billion divided by 275 billion in my expected 2019 revenue. We're looking at 3.5 times price sales. 950 divided by 20 billion in operating income that I'm expecting, and we're looking at about 47.5 times price EBIT. And so, these are the multiples for Amazon: 3.5 times sales, 48 times EBIT based on my expectations for 2019 financials. For a company that's growing 15 or 17%, these are, pretty lofty, aggressive multiples. But remember, revenue is growing at 17%, profits are growing much faster. Amazon has a huge moat. This is still a growth company in a lot of ways. It's a very high quality business in that it's probably, its growth is assured, I think, for the next few years. And so I think that's part of the reason it looks expensive. But now let's take a look at hyper charts, and I want to go under the hood and actually look at, what business segments Amazon has, because I think that'll give us a better picture of the value of this company. Okay, so here we are in hypercharts. This is Amazon on hypercharts. You can go to hypercharts.co/AMZN. This is the ticker for Amazon. So this is, I guess the first way we can start here breaking down the business. They do this revenue breakdown, which is AWS, international, and North American sales. AWS is the monster, their cloud computing powerhouse, which grows every quarter. This is their real gem of a business, reaching 7.7 billion, but that's very high margin revenue. So even though it looks small, it actually is very important. Let's take a look at what the international business is doing, because I'm always surprised that Amazon is so huge in North America, and I think that they have so much room to grow internationally, but their international business isn't really growing. As you can see, 14.9 billion Q1 2018 to 16.2 billion in Q1 2019. So not huge growth in the international segment, but North America here is still chugging along really nicely. 36 billion in revenue versus 31 billion in the year before. So aggregate, more growth in North America on an aggregate basis than international, which is really surprising to me. Now, if we go to revenue segments, a different way that Amazon breaks down the revenue, I think this is really, really interesting. So online stores, this is Amazon's core retail business. This is, selling stuff on Amazon.com. This is a slower growing business, 29.5 billion in revenue from 27 billion. So this is like their core engine business that they started doing. Then we have third-party sellers, which you can layer on top of that, which is growing faster than that. And this is the part of the business where Amazon essentially does all of your logistics, and then they just take a cut of it. And this is higher margin revenue for Amazon because this is platform revenue. And this is one of the reasons that Amazon's gross margin has been in a structural uptrend, which is something we're going to get to in a second. But as you can see, this business growing very nicely as well. And so these two businesses, online stores and third-party sellers, combine for Amazon's sort of core online Amazon.com retail business. Then the other really exciting part of Amazon's business that it doesn't look so exciting yet is physical stores. So this is the first quarter where they partially had Whole Foods. This is when they fully acquired Whole Foods. Since then, as you can see, Whole Foods has been shrinking, which has been masking growth in Amazon's other physical store businesses. Actually, I think there was very small growth. Yeah, 4.263 billion to 4.307 million. So we return to growth in the physical store segment, and this is something I'm watching super, super closely for Amazon, because this revenue segment includes Amazon Go, their cashierless checkout store, which I think has huge potential to be the 7-Eleven of the future and generate tens of billions of dollars. Amazon Books, their bookstore. Amazon 4-Star, the premium retail store that I visited here in New York City. The Whole Foods, any sort of expansion that they want to do in grocery with new Whole Foods concept or new Whole Foods stores. I mean, there's so many different ways that Amazon has been pushing into physical retail, which I think is fascinating. And this is the revenue line item that they're breaking out there. So I'm really watching this piece of the business as we watch Amazon push in that physical brick and mortar. And this is the AWS revenue. Once again, this is actually the same as in the other breakdown, so not too many new insights there. Subscription and services revenue. This is like the prime subscription revenue. So this is recurring SaaS revenue for Amazon. And as you can see, we're looking at 3.1 billion in Q1 2018 up to 4.3 billion. So this is an explosive revenue line item for Amazon. Back to AWS. I do just want to point out that this is a growth machine. 7.1 billion from 5.4 billion in Q1 2018. So AWS and subscription as a service are really the explosive parts of Amazon's business here. The other one is other revenue, which is all their other stuff, random things. But the bulk of this, why this is interesting, is advertising. So advertising is something Amazon has been pushing into heavily, putting sponsored results. I've actually made an episode about whether I think they're pushing too hard into advertising and whether that's hurting the consumer experience. That's a whole nother question. But the flip side of that is they're making a ton of money from those advertising businesses. So we can back this all out, and that is what Amazon is. So when you think of Amazon, so many people think of Amazon as just this Amazon.com retail business, when in reality, it's a collection of so much more than that. Sure, the retail business and the third-party seller business is a huge chunk of their revenue, but it's not a huge chunk of their profit. I mean, that's the retail business. That's a really tricky way to make money historically, but places like your Prime subscription, like advertising, like AWS, these are much higher margin, I would say sexier, higher value businesses. And so when you look at Amazon, you have to remember that it's not just one thing, it's a collection of all of these pieces. It's like a huge, holding company essentially that creates all these different startups and services. And so if we keep scrolling down here in the hypercharts, I just wanted to go to the margins chart, because this is what I was talking about. When we see here at the yellow chart, you can see the gross margin. Amazon's gross margin has been in a clear uptrend. This is since 2014, and it's definitely quarterly, fluctuating. But you can see if we just drew a line like this, it's basically gone from 30% normalized to 40% gross margins. And this is because they're transitioning to more AWS revenue is becoming a bigger piece of it. Third-party seller revenue is increasing, and their profitability of their core platforms increasing. They're layering on top subscriptions. They're layering top ads. Each one of these layers is really, really profitable for Amazon, and that's why we're seeing the entire structural profitability of the company rise. And so that you can see the exact same trend in operating margins, which went from basically zero and break even, and then have started trending up to about over 5% now. Here's the operating expenses. And then the last chart I'll go to for Amazon is the growth chart. And this is really interesting. And we can see that it spiked here in 2017 because they had just acquired Whole Foods. So that made their year-over-year revenue growth look way better than it actually was. And now we've seen Amazon slow down to this normalized 17% growth rate. And that's how much they're growing in Q1 2019. They've guided between 13 to 20% revenue growth for Q2. So another quarter, about 17% growth. There you have it. Amazon, on one hand, their growth has slowed below 20%. 20%, which is making them not this sexy high-flying growth stock anymore and less of, a crazy technology company that gets growth investors excited. But the flip side is their profits are soaring. And even if they're guiding for, decreasing profits next quarter, I think this trend of that margin chart I showed you of improving margins for Amazon is just going to keep pushing. And I think their gross margins are going to keep improving. The revenue is going to keep going up, and this is going to lead to improving operating margins. And Amazon's profits are going to grow much faster than their revenue growth. So even though revenue growth is under 20%, I think the 47, 48 PE isn't that expensive given their earnings could be growing at 50% per year, compounding at that for the next couple years. And so, this is, and I'm personally very bullish on Amazon. I think it's a really well-run company. I think they have a lot of growth ahead of them despite being huge. Like, I think everyone says, oh, who's going to be the first to $1 trillion? Who's going to be the first $1 trillion company? Like, no, I think Apple, Amazon, Google, like Facebook, they all have the potential to go to several $1 trillion in the next 5 to 10 years. And that's what I think is going to happen to large cap tech. So, I'm not invested in Amazon because I think it's a little too slow and boring for me. But I see the company that has, tons of cash on their balance sheet, is now pumping out billions of dollars, has exposure to online retail, which is still, it has a huge runway for growth, has exposure to cloud computing, invented cloud computing, which is huge, has Alexa, what they're doing with the smart home, and AWS is also just the backbone of like every popular internet service, Snap, Twitter, Netflix, they all use AWS. It's the backbone of the modern internet. So if you're betting on the digitization of our economy, then I think Amazon is an incredible company. And I think it's fascinating to watch them go from this no profit mode to start to produce profits. And I wonder what the stock market is going to react to this. Are they going to start valuing Amazon on a PE basis? Is that going to contract the entire multiple of the company in valuation? Or are people still going to give them a pass and view this as sort of a visionary growth stock? And, I'm really curious to watch how this plays out because I think the financials are showing that this is a more mature company. And for the first time ever, Amazon can't figure out how to spend all its money. There's too much money coming in. They can't figure out how to spend it. And that's what we're seeing. Warren Buffett has taken a position in the company. So maybe it's getting a little bit too boring. Now that's like the perfect sign that it's too boring for me at least. Anyway, so I'd love to know what you think in the comments below about this transition of Amazon's business model. Do you think it's a fairly priced company at $950 billion, too expensive? Do you see upside? Let me know in the comments below. Thank you for huge shout out to all of our Patreon supporters, producers for funding the channel. This is Hyperchange. Got a bunch more epic content coming this week, so subscribe. I'll see you guys next time. Peace.